Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective. Each time, we ask ourselves just one question, and that is, what happened last week, and what does it tell us about the coming ones? Do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel, L.A. Little. If you haven't subscribed, reach up there and subscribe. Anytime content's pushed, you'll get notification. It's an easy way to keep up with what's going on. Free and easy, nothing like that. And as far as what happened last week, well, these markets just rocked higher. Week of 25th, almost through with the year, folks. We're not that far away. S&P basically even on the year. Dow still down. Russell down 3%, but the leader is the NASDAQ, and that is what powered this index higher last week. If we flip over, take a look at the daily chart on the S&P 500. You can see it's right up to the top of the breakdown bar. That's 2076.61. It gets to 2075.15. It's at the top. It's coming up there with about 41, 44. It went down on 39. So, you're doing the same amount of volume on the way up. That means you can take it out. So, when I look at this and I look at it from a perspective of, will this take it out or not? And then I also kind of, review some of the things that we've talked about, like A, B, C, D structures that project much higher. There's certainly the potential that this isn't going to hold and this isn't going to reject price. At the same time, you don't want to forget that this is the top of the bearish retest regenerate zone that we've talked about for an extremely long period of time. That top was about 76 and went down to about 45, so right in there. So you pushed into it hard, and you did it off tech earnings. This is the S&P, where tech is a portion of it. It's one of the two largest weightings inside the S&P, but you're not getting that kind of push elsewhere, and it makes me wonder whether or not this really is going to be able to continue higher. If we pull over the weekly on the S&P here, if we look at the retest regenerates here, you've got one at this price point, and that was this one that got broke here, right? You got another one. Remember, they broke 4 of them on the way down, and there's the other one. And then above that, you've got these 2 higher ones. I'll go ahead and draw them all in so you can see them all, right? And so you've got these all set up. And if you will, just note where most of that overlap occurs. In almost every case, right? 3 out of the 4 cases, the overlap's right here. And where are we? We're right there. That just by itself makes it hard to keep going up, especially when this has been a vertical move off the bottom. S&P, if it's going to do its thing, if it's really going to power higher, this week's going to be the test. And so we'll see if, in fact, it can do that. If we move over and take a look at the NDX, that is exactly what the NDX has done, though. So we shouldn't, put it to the side, so to speak, and say, oh, well, it's done everything it's supposed to do, and now it's just going to turn and run. Well, maybe not, because look at what happened here. This thing had done everything it was supposed to do right up to here, and then it spiked higher, gapped higher, and ran farther. And, of course, all of this came off of more central bank largesse. We've got more ECB, QE, in December. That's what they told us on Thursday. That was what drove this move higher here on Thursday. Then we got the tech earnings that drove us overnight. That was Microsoft, Google, and Amazon, all up roughly 10%, although they didn't close there. They drove it, but it was a narrow advance when you look at the gainers and the losers on the various markets. You had 2-to-1, which was okay on the NASDAQ, but it was almost 1-to-1 everywhere else. In other words, it was all concentrated on tech on Friday. Why is that? Well, because you've already had a huge move. It's hard to go vertical after the end of a vertical move. You've really got to have some reason for it. And I'm not sure what that reason is going to be this week. You've got 2 more items that can move the needle this week. They come to back and back just like these did last week. That's Apple Tuesday, the Fed Wednesday. We'll talk about those in a second. If we go over here, though, this one's already over the breakdown bar. And if we look at it on a bearish retest regenerate, it has already told us that it does not intend to regenerate lower again. It's gotten over that swing point lows high. It's gotten over this swing point lows high. Those were the ones that were broken here. Breaks them, comes back over them. Folks, when you get a move back over the top on swing point low breaks, especially if it was multiples, right? It tells you the trend isn't that way anymore. It's more like this at worst. And given where we are, it could easily be like that. So NASDAQ NDX is telling us that this thing does want to try and progress higher, not lower, over time. NASDAQ Composite, if we look at it, breakdown bars here, that was 49.86. You get over it on Friday, 50.31. If we pull it to a weekly, the breakdown bar on the weekly is up here. That price point is 50.92. Now, if we look at the retest regens on the NASDAQ, 50.32 is the lowest of the group. We're at 50.3186. So just like the S&P, the NASDAQ is set up right at the edge, and this week becomes the test, right? So you've got, actually, let me grab it and do it this way. You've got the bearish retest regen playing out, and it's playing out right to the top of the test area. Recognize that all of these have these huge ABCD structures set up that they're actually trying to push now, every one of them. Takes them to new highs, every one of them. And they're significantly higher if, in fact, they do continue. So this area on the S&P, on the broader NASDAQ, becomes a key area for this market to either prove that, in fact, it's going to run until the end of the year and farther, or that this was nothing more than just one more big push back up, right, into a resistance zone. And I'm going to go back to the S&P to draw it into a resistance zone that we've talked about before. And let me bring this to the weekly. That looks, on a classical level, looks like sort of a head and shoulders top, right? You've got this, right? That kind of looks like a head and shoulders top. If, in fact, this does begin to turn down and fells, especially if it fells, in other words, if you come back down and then you fell on that move and come down harder, all of a sudden you're going to see these pictures everywhere. Of course, we're talking about, farther out. It's not going to happen overnight, but that sort of a scenario is the sort of scenario that people love to write about and love to talk about. On a neoclassical perspective, we've already talked about it. It's the bearish retest regen that's going on. So that is the big picture in these markets right now. And lastly, I'll leave you with one more thought, and that is that if we look at the Russell, and I've got it on the daily, the Russell can't even get over a swing point high. That's how pathetic this one's acting compared to the rest. And so if the small caps can't move and everything else is moving, then really, what the heck is going on? Is there really that much divergence? And when you have that much divergence, can you put that much confidence in a sustained move to the upside or a sustained move to the downside if it was the opposite situation? It's pretty hard to do that. You can't expect a sustained move to the downside if you've got one or two really strong indexes, or to the upside if you've got one or two really weak ones. And actually, when indexes, it's really one, because you only got four, unless you're going to use your overseas markets as part of that. And speaking of overseas, the overseas markets are a long ways away from telling us the same sort of extremely bullish scenario that we're seeing here. So let me pop those up. I'm going to start in Europe, where we're seeing the breakout, right? Again, Europe says we're going to QE ourselves to death, get a nice big spike. Put it on a weekly, though. It looks a lot different. The retest regen was here. That tops 10,810. It gets to 10,794. So what are we doing all around the world, all across the U.S.? You're coming back to do, in all cases other than the NDX, and of course the Russell, which can't do anything, you're coming back to do the bearish retest regen, and you're coming right to the top of it to test into it, and you're coming in when? On Apple earnings and the Fed speak that happens on Wednesday. So that's kind of what's happening there. Look over to Shanghai. Shanghai's coming back. Remember we talked about this number, the 3,500. You need to get over that. Shanghai's trying to push up to it. It's 34.13 now. That's the number. I still think Shanghai has to show us it can get over that level. And if we move over to the weekly here on the Hang Seng, the Hang Seng is coming back in like the rest of the world and doing bearish retest regens. So if we draw this one out, you've got it here to there, and where are you? Right there at the top, testing it. So I think it's fairly clear what's going on and what's happening this week, and that is that these tests are going to play out, and they're going to answer the question of whether these markets are going to work higher or not. And it's a fairly clear-cut decision. Either they do or they don't. And that decision is going to be based on whether or not these charts start telling us that, in fact, it's no longer this, but instead that. And how does it do that? It gets over the bearish retest, regenerates, and changes trend. It at least gives us that early warning system that that's probably what's taking place. And you need that kind of knowledge to make a decision. We're at that point where that decision is probably going to be released, and we're going to get that kind of information and be able to decide, is it that way or not. Now, I think, given the setup, the more likely scenario, given the way these moves have unfolded, and what I mean by that is they've been vertical, right, on the way up, and you can get vertical moves on the way up. They just, like here, for example, you can get these vertical moves. It's just that as they get higher, it gets harder and harder to keep going until you get some sort of a retrace and then a move back. And so I would think that you're going to see, something come along that's going to make this market try to retrace. I think that's the more likely scenario. What's the unlikely scenarios? Well, both of those are the other extremes, and that is that this thing just keeps screaming higher. And I don't mean just the Hang Seng, I mean all the markets. Or it turns and just dives back down. I think that's unlikely as well. I think what's more likely is you get some sort of retrace take place, and then after that, right, you get the next push that tries to actually build on this and make things go higher. And I think that's when the real test, kind of the final test, if you will, you find out whether the bearish retest are really going to regenerate lower or not, or if this market is in fact going to trade sideways to higher. So that's the setup. That's what we see. That's what it looks like, and we'll have to take a look at that as it unfolds this week. As far as this week, there's a couple other quick things that we should note. Sorry for my voice. I'm still just getting back. As you know, on Thursday, I probably sounded pretty rough. I was getting a little sick here, and just starting to feel a little bit better. But I want to move over, and I want to show you one other thing that's going to become a factor pretty soon, and that's the dollar. If we look at the dollar made a huge spike up. That's because everybody else is devaluing again. And there's no hint yet that we're going to devalue. Now, if we start to devalue, then it's going to be a different boat. But right now, it gets over that swing point high, gets over this swing point high, and it's going after the next one. And then, of course, it will go after the one at the top. That's on the daily chart. If you pull it back, look at the weekly, you really got two swing point highs on the weekly. That's the dollar itself. Now, where it's really evident, of course, is in Europe. Europe breaks, of course, going the opposite direction. Breaks 2 days in a row, takes out 3-4 swing points on the break. May have even taken out 5. Let's see what this one is. 108.10. And yeah, took out 5 of them. 5 of them in 2 days. So that's a pretty powerful move on the way down. And if you pull this one to the weekly, it also breaks on the day on a weekly chart as well. That's multiple swing points breaking on multiple time frames after a consolidation, after a large decline. So you had a huge decline, a consolidation, and now you get another break. This could lead to the next leg to the downside. And if you're talking about a leg to the downside on the euro, you have to go to the monthly chart. That potential leg could be huge. And so if you do the ABCD structures on the way down, you really had nothing here until you got to there. You got your bounce to here, and now potentially the next leg down. And folks, that leg down is not small. If you just calculate, the percentage move from here to here is about 25%. So if you take this 114.5 or so, what is it, 114, almost 114, almost 115, and you project that down 25%, that's going to take you into the 87 number, right? Some 87 plus. So you're projecting another move down. We're trading at 108 now. You're projecting another move down, another 19, 20 points. It's not insignificant. And so, if in fact this was just the pause before another leg down, this is itself going to get pretty ugly. And if the Fed really does tighten rates, that's in fact what you're probably going to see. The other one that's worth noting, and I'm bringing up the currencies because they affect everything so much, is the yen just broke a slew of swing point lows as well here on the daily. And if you look at it on the weekly, it's a little different, right? They're all down here. To break a swing point low here, you got to go a lot lower because it already tried once before and bounced up. So there's a long consolidation still taking place. And if you pull it to the monthly, the question has to be, is again this just a long consolidation that's taken place? So in other words, you get the big first drop, consolidate, next drop, consolidate, right, before you get the continuation that eventually, finishes off what was the first ABCD structure, right, that never has quite finished, which is just a little bit farther down into here. And so that's really kind of the question here on the Japanese yen. Now, if the dollar really does gain strength and start breaking out the new highs, what is that going to do? Well, it's going to pressure multinationals' earnings because so much of it is from overseas. And I'm sure that they're not going to hedge it all off, all that risk, the currency risk, and so it's going to lower their earnings. And that's going to affect earnings down the road on the S&P 500. That's a big take of where we're at. And and one last thing on the currency that I forgot to bring up, and that is that commodities are going to get hit again. The XLB, the XLE, all those are going to continue to feel pressure as a result of what takes place here in the currency markets. Here's the oil market. You can see all the swing point lows lined up. It's right there, ready to break them all. And you can go to almost any chart that's in the commodity complex and see a detrimental effect on a dollar strengthening take place. And that is going to make it difficult for the market as well. That's it for tonight. I'm going to leave it at that. I think that gives you a feel for where things are. And honestly, I'm a little tired and probably just going to wrap it up and take the rest of the evening off. Have yourself a great one. I'll be back hopefully in full force tomorrow, and we'll review what happens in front of Apple. The news is Tuesday and Wednesday.